want to refinance your mortgage loan? Well, good news, as a homeowner, you have access to this very powerful tool, which other people do not. And while there's unlimited reasons for why you might want to refinance, there's really only 3 types of refinance loans that apply for most homeowners. And those are going to be your rate and term refinance, your cash out refinance, and your debt consolidation refinance. Now, if you know which of those 3 it applies to your situation, you should be able to look below and navigate to that specific spot in the video. But for the rest of you, you can sit tight. We'll dive into each of the 3 a little bit. You can kind of understand how each of them work, see which ones apply to your situation, and hopefully get some tools to help you achieve your financial goals, whatever those are. So sit back and enjoy, and we'll dive right into it. All right, so before we get into the different types of refinance loans, there's one really important topic that I want to talk about, and that's mortgage insurance. Some of you may already know this, but mortgage insurance policies exist to protect the lender in the event that you as the borrower default on your loan. Luckily, most people don't default on their mortgage loans, but most of us still have to pay mortgage insurance for those that do. It's a mechanism to help protect the lenders in the industry so we don't have, massive collapse like we almost saw in 2008. Now, what mortgage insurance looks like is it's typically a portion of your mortgage payments, usually somewhere in the neighborhood of $100 to $200 a month. It's just bundled into your monthly mortgage payment, but when you make that payment, that portion of it just goes to pay for the insurance policy. Now, luckily, there is a way to get out of mortgage insurance, and it involves the equity in your home. So when you have at least 20% equity in your home, you are generally able to refinance and drop the mortgage insurance premium. So what that means is even if you were refinancing for the exact same rate, you could potentially save a considerable amount of money on your monthly mortgage payment. So just something to keep in mind as we talk about these different types of refinance loans, because that concept of that 20% equity and dropping that mortgage insurance premium will apply across all of these situations. Now, based on the type of refinance you're doing, it might make it a little bit harder to stay within that 20% threshold. But definitely food for thought if this is something that you're considering for yourself. So the first type of refinance loan we're going to talk about is rate and term. And just like the name suggests, this loan is generally about securing a better interest rate on your mortgage or shortening the term of your mortgage. And some of you may ask why you'd want to shorten your term, and really it's just about paying your home off a little earlier. Generally paying a little bit less in interest, but usually paying a lot more towards principal in each monthly payment. Just an option for people who want to pay off that debt a little bit sooner. Now, if you're shopping for rate, obviously it only makes sense to do this if the market's at a place where the rates available today are better than the rate that you currently have. So for example, right now, I think rates are somewhere around 6.5. So if I bought it 5.75, well, it doesn't really make sense for me to do a rate and term refi right now unless I was wanting to shorten the term of my loan. Now, one thing I do like to call out with this applies to all the refinance loans, but because this is the rate and term product we're talking about here, one thing I do like to call out that wasn't available in the past is it is possible today to keep your existing term when doing a refi. So for example, let's say your current mortgage is a 30-year mortgage and you've been in that home, in that loan for 7 years, so you've got 23 years left on the mortgage. Well, today you can do a refinance and keep that 23-year term. So you do pay for that, but for folks who, they do want to pay the house off at some point and they don't want to kick that mortgage loan back out to 30 years, just something to know that it is possible, depending on the lender you're working with, to get a custom term loan when you're doing a refi. So a cash out refi, pretty straightforward again, just as the name suggests. This is where you're taking the value of your current mortgage and you're coupling it with a cash out payment that you're gonna pocket. You're combining those two things and that's gonna be the balance of your new loan. Now, when you do this, you're pulling that cash out of the equity in your home. So you can't, if you have a $100,000 mortgage on a $100,000 house, you won't be able to do this. But let's say you bought a house for $280,000 several years ago and it's worth $380 now. Well, you could pull some cash out of that. There's going to be some limits on that, but you can use that cash for anything really, for home improvements, for educational purposes. You can go get that master's degree you've been eyeing. I've seen folks pull these out for down payments on other investment properties, and I've seen people pull these out as gifts for loved ones, whether it's for like to pay for a wedding or to help a loved one with a down payment on a house. So there's a lot of reasons, again, probably unlimited reasons why you could pull the cash out of your home. Now, one thing to keep in mind with these, especially if you're someone who's eyeing rates and where the market's currently at, when you do a cash out refinance, you will take an automatic hit on your interest rate. Generally, it's going to be in the range of 0.125% to 0.5%. Just depends on the lender, the product, the current market conditions. So just be in mind of that if you're seeing rates at 6.5 right now, when you go to do that cash out refi, you're probably not going to get a 6.5 without paying some money to purchase that rate, essentially. But again, this is an incredibly powerful tool. This, along with debt consolidation, are really the things that non-homeowners, people that are renting, they just don't have access to it. But for the rest of us, thankfully, we have this amazing ability to use the equity in our homes to help improve our lives in various ways. Now, I wish that more people had access to this. It's something I'm very passionate about, but for where we are today, be grateful for the fact that you own a home. Hopefully you have some equity in it. And even if you're not refining today, you've at least got this option on the back burner so that you know that you can use it if you ever need to. So the last refinance loan I want to talk about here is the debt consolidation loan. Yet again, as the name suggests, this mortgage loan is a refinance loan specifically intended to help consolidate other debts. So why would you use this? Well, let's say you have some credit card balances, some car payments, maybe you have even medical debt, personal loans, things like that. Those loans, those lines of credit, even HELOCs, are going to have higher interest rates generally, often much higher than the interest rate that you would have on your mortgage loan. So if you owe $10,000 on your credit card, but you're at a 22 or even a 15% interest rate, and you owe $10,000 on your mortgage that's at a 5.75 interest rate, your monthly payment on those is going to be vastly different. So these debt consolidation refinances, it kind of works the same way as a cash out refinance. You have to have equity in your home to do this, but what you're doing is you're pulling that equity out and you're using that money to pay off those other debts, and you're rolling those balances into your new mortgage. So if you're paying off $20,000 of other debts, your current mortgage, let's say, is 80 grand, you have some equity in the house, you do this debt consolidation refinance, you take 20 grand out, pay off those other debts, those other loans at the higher interest rate, and your new mortgage now is gonna be for $100,000, but you're gonna be at, wherever the current rates are. Right now they're around 6.75. Instead of like a 12, 15, 18% interest rate. Hugely beneficial, especially in today's economy. Credit card debt is at an all-time high. Medical debt is the #1 cause of bankruptcy. Again, if you own a home and you have equity, you're in an incredibly fortunate situation, because there's a lot of people out there who are just being crushed by the other debts in their life, and they just don't have a way out of it. So again, just know that this is out there. In general, this isn't always the case, but in general, these debt consolidation loans are not going to take the same rate hit that a cash out refi is. But again, if you're in a situation where you're trying to get out of some high interest loans, generally a minimal interest rate hit isn't going to be a major concern. But again, very powerful tool. And in my opinion, I'll say this, I talk to people all the time who are doing these, and there is a sense of kind of shame that comes with having to do this. And I tell everybody I work with, there's no reason to be ashamed of this. We live in an economy, in a society that's becoming harder and harder to survive in on a daily basis, and life throws curveballs at you. Just be grateful for the fact that for whatever reason, you're in a situation where you have that home, and you're able to take advantage of that equity. And I always kind of consult with people on this. You want to take a kind of a long-term look at this and see, okay, if I do this now, where's this going to put me in 5 years? Most of the time, if people have a lot of high interest debt, this type of refinance makes a lot of sense. There is one caveat to this, I will say. Some people get into a lot of debt because of addictions or bad habits. If that's your situation, my recommendation is probably need to deal with that behavior as well, because otherwise you're just going to do this refinance, jack up your mortgage loan balance, and end up in a similar situation down the road. Now that applies to very few people. Most people that are doing debt consolidation refinances are not in that situation. They just got thrown some curveballs and they've done what they can to manage, and so now they've got to use this tool to try and help kind of right the ship a little bit. Whatever your reason for wanting to refinance, I'll say again, you are in possession of a powerful, powerful tool that not everyone has access to. Don't be afraid to use it. If you're interested in learning more about any of these topics, or if you want to discuss your specific situation and see what makes sense for you, see if there's a way to help you reach your financial goals, whether that be pulling money out for some projects or big life events, or if it's about consolidating debt or just lowering your monthly payment, I would love to chat with you. You can use the button either above or below this that says request a call or text, or if you're watching on YouTube, you can use the link in the description. You'll just fill out a short little form, just kind of basic information about who you are. But one of the things you'll do in that form is tell me where to contact you, and when. So your preferred means of contact, and then I'll reach out to you within 24 hours and we can have a chat. But I hope you guys found this helpful, and I hope you have a fantastic day. Take care.